Hello everyone, I'm Dr. Stock. Today I would like to talk to you about some of the stocks that I've been looking over, especially throughout this time when the market's been in the red a lot, and deciding where I should go next from here, where I want to put my money, where I think it's going to serve me the best. And I came up with a few companies, plus I'd like to give a CCIV update. So I can't wait to share these ideas with you. Let's get ready to rock. Welcome back. If this is one of your first times here, down in the description is a link for my Patreon. That Patreon is connected to a private Discord where we talk stocks, and I also offer several of my portfolios, and I also offer a weekly stock list that I contribute stocks to, and that some of the people in the Discord, the patrons, also contribute stocks to, so you watch that and see how they perform throughout the week. It's getting pretty exciting. I'm always looking at new services to offer. So if you'd like to check that out, the link is down in the description. I hope to see you there. Also down in the description, you'll find a link for Webull. By signing up for Webull and depositing $100, you get 2 free shares. I get 2 free shares for the referral, so thank you ahead of time for that. Finally, subscribe, hit the notification bell, hit the like button, share it with your friends. Let's get on to the stocks. Alright, so the first stock that I have for you is Verizon, ticker symbol VZ. And the thing that really caught my attention about Verizon, not only the gap up that I had recently, you can see in the past month or so, since, well, it looks like the beginning of December, it's had a pretty straight climb downwards, bottoming out around $53. Now it's bounced back up. Today it reached a high of over $57, and you can see it ended very narrowly, but it didn't drop down to where it was before. This might be a turnaround point for Verizon going forward. Berkshire Hathaway, $8.6 billion worth of Verizon. That's 146.7 million shares of Verizon, and that was likely a pretty decent contributor to what we see here with the price action, if not solely because of Berkshire Hathaway, but certainly in the wake of the announcement caught people's attention. So there's a few reasons why I think that Verizon would get Berkshire Hathaway's attention. First of all, it has a reasonable PE of around 11. Second of all, there's room for growth in the stock price. According for the analyst targets, to the average estimate of about $57, there's about 8% room for growth there, up to the high estimate of about $70. There's room for about 24-25% growth in order to get to that. So having the growth in those 12-month price targets is good. They also had positive earnings news for Q4 of 2020, and furthermore, Verizon is paying a 4.4% dividend yield, so 4.4% on every share that they own for the 146.7 million shares in the stake that they reported. So for $8.62 billion at 4.4%, so they're looking at, well, a lot of money. They're looking at about $300 to $400 million per year from the dividend yield alone, just on the Verizon stock. So I would say that that's a pretty strong move for them. Also, viewing Verizon as a 5G play, I think, is also one of the reasons why it would be good to invest in Verizon, and why I think Berkshire Hathaway made the move that they did in order to make such a strong purchase into Verizon. All right, next we have T-Mobile, ticker symbol TMUS, and this is also something that was picked up by Berkshire Hathaway. You could call this a little brother purchase to Verizon. That was a much smaller stake for this one. That it was about 3 million shares. So when you compare that to 146.7 million shares, then that's about a 50 times difference between the two of them. So I like T-Mobile as an early 5G innovator, and I really think that they have a lot of opportunity for market penetration against the giants, against Verizon and against AT&T, and right now they're at about the current price target of $125 for the low. The average price target of $153, they're about 20% off of that right now. So over the next 12 months, that gives them time to grow up to that value if you see that strength coming for T-Mobile, and that's something that you could believe in. Up to the high analyst estimate for the price target, that's about an 80% upside potential. So we go anywhere from 0, because at the low estimate, because we're already there, up to 20% to the average, up to 80% for the high for the analyst price targets for T-Mobile. So even though we typically like to buy on red days so that we can get things at a discount, you can see from the current price action on the daily chart here for T-Mobile that it has a fairly low price right now compared to what it was trading at with all the red that we had in the markets the past couple days. It could be something that's helping to pull this stock price down. And you can see the resistance that it had if I move my line up here for you, just over $130 a share. So at its current price of $123 that it has, I think that you could see 5 and then up to a really good day, 10% of your money in the short term on T-Mobile, even though it might trade up and down for a little while, that it might have that volatility to it. Having that 20% upside to the average estimate and having that 80% upside to the high estimate, I think that that leaves a lot of room for growth for T-Mobile. And also having Berkshire Hathaway support this stock by making a large purchase in this stock, relatively large, of course, more than I could purchase. It just gives further evidence to the stability of the stock and its growth potential going forward. All right, so moving right along, I did share a dividend portfolio, and I know that Verizon would fall into that one. This one I think is also a really good play. This is ABBV. I pronounced the company's name ABBV. This one is currently coming in at about $106, and Berkshire Hathaway recently added about over 4 million shares to this. Also, ARKK has been starting to invest in this. They currently have over 600,000 shares. So even though it's down off of its highs right now, I still think that there is a lot of potential in this stock as well going forward. ABBV is a dividend aristocrat, which means that for 25 consecutive years that they've paid consistent dividends. According to analysts, there's about a 20% upside potential for this stock as well, so there's room to grow, and it pays a dividend, so it's a win-win for people who believe in the stock and can see it going up to that 20% upside potential that it currently has. If we look at the analyst estimates that we have, we're currently above the low estimate, but you can see we're about $14 off yet for the middle estimate, and then for the average estimate, and then for the high estimate, we're still somewhere between 30 and 40% off of that one. Now, one of the nice things also near term about trading into ABBV, if it's something that you care to trade into, you can see that it had a recent high of $113.41, and then it came down, it bottomed out around $101, a little bit under that. It failed to make a new high, but then it also failed to make a new low. So what we could be seeing is a little bit of sideways consolidation, and it's always nice to see these shares or these prices settle down for a while if it consolidated or traded in a range for a little bit, just to allow us as investors to have a little bit more confidence in its price and reevaluate the trend that's in front of us or that's before us. So seeing the big money get into this and following in the wake of that big money, we as retail investors stand to benefit from that. And so following right along with ARKK's purchases and also with Berkshire Hathaway's purchases, I think that the potential that they see, we do our research and our due diligence, and if we see that same potential, then this is a stock that we could possibly also buy into. All right, next we have Palantir, and man, did Palantir get beat up for earnings season. It did not make as much money as people were hoping, and there is a lot of slowdown, and we're really hoping to see a lot more money come in to Palantir, and there were concerns that I expressed before that I had read about the scalability of their business model, that the entry level for the technological aspect of it versus the offerings that they have, there needs to be a little bit less of a ramp-up period, a little bit less of an initial investment, and a little bit more on the service side of things. And if they get that just tweaked a little bit, I think that they'll really hit the nail on the head and that they'll move back up toward that. I mean, they had a $45 high at one point, and now it's down to almost half of what it was at one point in time. So right now they're currently sitting at about an area of support. Looks like they closed the day at $25.17. The thing that excited me about this, now Palantir is a company that I like, and I think that it's going to be around for a while, and I would just like to see confirmation of other people believing in the strength of Palantir, and some of that confirmation came through ARKK today, that they purchased 5 million shares of Palantir, and I believe that they feel like they got a bargain price on this and that there's a fair amount of upside potential and that they see strength in the company. So it was one that I already had a small position in, and it was nice to go along for the ride up. And then, we took that tumble back down with all the red in the markets, and then also their earnings not going quite as well as we had hoped. And again, following the big money here can sometimes give us a little bit of guidance on what to expect for a company like Palantir. Does it have the strength that we thought it did, or is it one that doesn't have as much strength as we thought it did? And seeing Ark jump on this really confirms that it does have that strength and it does have that potential to really continue to be impactful in the marketplace. So I placed another small order and I added that to my growth portfolio, and I think that I got in at a really reasonable price for Palantir, and we'll see how it plays out from here. Finally, CCIV, and I'm excited about this one. It's kind of a guilty pleasure to talk about it, just because it is fun to go along for the ride. I got in on this one around, I think it's $18.60 or so, $18.60, and taking this ride up, seeing it hit almost $65 a share, that was astounding. It did come back down quite a bit, came back down by the market close to about $58, but still percentage-wise from where I bought in to where it is now is incredible. People are anticipating an announcement between Lucid Motors and Churchill Capital, and that's really what's driving this. And I think the day that we get that announcement is going to be big. I mean, we have $65 just with people expecting it, and there's still going to be some room to run up to, I'd say, at least the mid-70s should we get the announcement in the near term while we have all this excitement. If they take too long and people get tired of it, I don't know if we'll see that same amount of excitement. I don't know that I expect that announcement to come tomorrow. I really think that we would have that announcement sometime in February. I don't think that Lucid and I don't think that Churchill want to miss the excitement that goes along with this SPAC right now and the potential that it has. I think that they want to capitalize on that, and I think that they would be best served in doing that by doing it within the next few days. I don't know. I have no inside information on this. I don't know that that's anything that they're going to do. I don't know if I see that announcement coming tomorrow during the trading day or in the after hours. I think really we would see it next week for that last week of February. I don't know that they would let it go into March. Again, I think that they really want to capitalize on the excitement that's here, and I really hope to really watch this price really spike for us. And depending on how much it spikes, I might take my money and then wait for it to settle and then come back in once that hype from that excitement that is built all this time, wait for that to come back down and then buy back in, or if I'll just sell some of my shares, some more of my shares, and just let the rest ride. I haven't decided that part yet because really I want to see how it plays out in order to make that decision. I'll try to catch it at the top, but that's kind of a difficult thing to do because if you're waiting for it to go to the top and then it never gets that price that you're waiting for and then it tumbles down, you get a lower price anyway. So just a quick look at the 30-minute chart just so that you can see what this stock has done over the past few days since we've had all that excitement in the market with all the different rumors and everything. You can see every time that a little bit more comes out that we get a little bit more excited, and then the anticipation is just building, and it's almost like this is graphing anticipation more than it's graphing a stock price over time. But the anticipation is building. You can see people got really excited about it today, and then there's some profit taking, and it settled back down to a more reasonable line. And we'll see what tomorrow's final day of the trading week brings in. And if we get an announcement, great. I'm okay with it. I really do think that it will come. If we get one at all, I think it'll be in the last week of February. Again, I don't think that CCIV, that Churchill Capital, or Lucid wants to let this get cold. I think that they should strike while the iron's hot on this, and while the investors are excited about the company, I think it would serve Lucid well to keep the investors excited about the company if they are in fact choosing to merge with CCIV. All right, so let me summarize. Verizon, T-Mobile, I could see both of them as being reasonable 5G plays and also stocks with room to grow, and the fact that the big money is into them, Verizon, in a really big way. You know, following that big money can sometimes be ways to find easy profits for us, easy gains. ABBV, also a really nice dividend play, a really stable one. Berkshire Hathaway being in it, Ark Invest being in it. Again, following that big money I think would serve us well. Palantir, I think that possibly we hit a nice bottom being in the area of support that we're at right now, that some of the shock of the earnings has worn off, and now we might see a little bit of a consolidation, or maybe the price might actually start to recover. I don't know that we'll drop from here, but I don't expect it to drop much more from where we're at now. I think given the red in the markets, plus the bad news already being out, and the fact that it had a little bit of a green day today, I think is good signs for Palantir holding the bottom price or that low price that it recently achieved. And then finally, CCIV, I think right now it's the market's favorite rumor that's out there is that merger with Lucid Motors. And, you know, I hope it happens. I think it'll happen. and it can't happen soon enough. The discourse is just going to go nuts. I think YouTube's also going to go nuts, and the news is also going to go nuts. There's probably going to be like confetti falling through the internet somehow, should we get that announcement. So those are the things that I'm looking for, and they're all companies that I think have growth potential to them. So take a look into them, see what you think about them. Let me know down in the comments what you think about these companies, and I really look forward to hearing from you guys. I better wrap things up here. So if you want to join my Patreon, that link's down in the description. If you want to sign up for a Webull and deposit $100 to get your 2 free stocks, that link is also down in the description. If you haven't already and you'd like to, hit the subscribe button, hit the notification bell, hit the like button, share it with your friends. Remember, this video is for entertainment purposes only. Always do your own research and always do your own research and due diligence. Contact a financial advisor before making any financial decision. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.